Picture this. You are standing right in the middle of the Huaqingbei electronic market in Shenzhen, China.
Oh, wow.
Today is Sunday, August 16, 2026, and the atmosphere in this room is just, it is entirely unhinged.
It's chaos.
Complete chaos. Traders are literally sweating through their shirts, frantically shouting over these banks of glowing monitors, just desperately trying to lock in orders.
Right.
And the prices on the screens are fluctuating so violently that the numbers are being rewritten, like every 30 minutes. I mean, it looks exactly like the floor of the New York Stock Exchange during a massive historic rally.
Yeah, but they aren't trading stocks.
Exactly. Here's the crazy part. These traders are not screaming over advanced AI chips. They aren't trading, rare earth metals or uranium. They are losing their minds over a component so microscopically small that if you dropped it on the floor, you would honestly never find it again. So welcome to today's deep dive.
It really is an unbelievable scene unfolding over there. And it's the perfect starting point for us today. Because we hear endlessly about the artificial intelligence revolution, right? For you listening, we see the headlines about trillion-dollar valuations, massive data centers, and advanced neural networks every day.
Constantly.
But today, we are looking at a tiny, incredibly unsexy component that is quietly holding that entire technological leap hostage.
Yeah, exactly. And for this deep dive, we have pulled together a massive stack of sources to figure this out.
A really great stack today.
Yeah, we're looking at market bulletins from TrendForce, industry insights from Rebound Electronics, Udebetter, passive-components.eu, and UF capacitors, plus some really eye-opening reporting from the Mail Business newspaper and the Elec.
Right.
And our mission for you today is to explore what this component actually is, why the sudden explosion of AI has completely broken its supply chain, and how this invisible shortage is rippling out to impact literally every single piece of technology you interact with.
So let's establish what we're actually talking about here. The component is the MLCC, which stands for multi-layer ceramic capacitor. In the manufacturing world, it has this great nickname. They call it the rice of the electronics industry.
The rice of the electronics industry, I love that.
Yeah, because it is the fundamental staple of modern technology. You cannot build a modern electronic device without it.
Okay, let's unpack this because I love that analogy. But we need to go deeper into the physical reality of this thing.
Sure.
Because if we want to understand why traders in Shenzhen are treating a speck of ceramic like it's a bar of solid gold, we need to understand what it actually does inside a computer. And our sources use another brilliant analogy for this. They describe the MLCC as a microscopic electrical dam.
A dam. Yeah, let's take that analogy and apply it to the physical hardware.
Okay.
Because computer chips, especially these advanced processors, are incredibly sensitive to electrical fluctuations.
Right, they need perfectly stable power.
Exactly. If you have a massive $40,000 NVIDIA GPU processing some complex artificial intelligence query, it doesn't just draw power in a smooth, steady stream.
It's more erratic.
Highly erratic. It sits idle, and then suddenly, for a fraction of a second, it violently yanks hundreds of watts of power.
Wow. And I imagine that sudden pull creates a massive drop in voltage across the entire circuit board.
It does. And if that voltage drops even a fraction of a percent, the chip starves.
Oh, wow.
Yeah, it throws an error, it crashes, or in the absolute worst case scenario, the hardware literally fries itself.
So a $40,000 chip just burns up because of a tiny voltage drop.
Right. So to prevent that, hardware engineers surround these massive chips with thousands of these microscopic electrical dams, the MLCCs.
I see.
These capacitors sit right next to the processor, storing up a tiny little reservoir of electricity. And the millisecond the processor demands a massive spike in power, the dams open.
They release the stored energy.
Instantly, they fill in the gap and keep the voltage perfectly mathematically flat.
So without this literal grain of sand, the entire multi-million-dollar server rack essentially self-destructs.
Precisely. And what's fascinating here is that the physics of artificial intelligence have completely changed the math on how many of these dams we actually need.
Okay, break that down for me.
Let me put some hard numbers to it from the sources. If we look at the validation testing for AMD's new MI450 platform,
Which is a huge AI chip.
right, the sheer volume of power required is staggering. To keep that specific architecture stable, the engineers had to massively increase the capacitor count.
By how much?
Well, the requirement for just one specific value, the 47 microfarad MLCC, it jumped from 1,440 units on the previous generation to an astonishing 10,000 10,544 units per board.
Wait, really? Over 10,000 of these little dams on a single board.
On one board, and the math gets even wilder when you zoom out.
Oh boy.
If you take those boards and scale them up to a fully populated AI server rack, you are looking at up to 600,000 individual MLCCs required for just one single rack.
600,000.
Yeah, think about the logistics of that. A machine has to flawlessly solder 600,000 microscopic components onto circuit boards without a single cold joint or defect, or the whole rack fails.
Okay, 600,000 is a massive number, but, and I have pushed back here a little bit, let's look at the broader global scale.
Okay.
MLCCs are in absolutely everything you and I use daily. They're in smartphones, laptops, microwaves, electric toothbrushes, cars.
Everything.
Right. Even if AI servers need hundreds of thousands of them, the total number of AI servers being built is still only in the millions. Meanwhile, we produce billions of smartphones every single year.
We do.
So how is a relatively small number of AI servers single-handedly breaking a global market that is already used to supplying billions of consumer devices?
That is the logical question to ask, right? And the answer requires us to look at how these things are actually built.
Okay.
It is not just about the raw number of capacitors, it's about the type of capacitor.
Because they aren't all the same?
Exactly. AI servers run incredibly hot. I mean, they operate at extreme voltages. A standard capacitor that goes into, say, your smart fridge,
Right.
it would just melt or short out inside an AI server farm. So the industry needs a heavily ruggedized, ultra-high capacity version of the MLCC.
And I'm guessing those are significantly harder to make.
Infinitely harder. Let's look at the specific grades. The industry relies heavily on a standard grade called X5R.
X5R.
Got it. That is your everyday temperature-resistant part. It's cheap, it's reliable, and factories can just pump them out by the billions.
That's the smartphone and smart fridge part.
Right. But AI requires higher-end grades like X6S and X7R.
Okay.
These are components engineered to withstand blistering heat and massive voltage spikes without losing their ability to store power. And to build those, the manufacturing yields are much lower, the baking processes take significantly longer, and the failure rates during production are much, much higher.
So if you're a factory manager and you have a finite number of machines on your factory floor, you suddenly have a huge problem.
Massive problem.
You have Silicon Valley screaming at you for these high-end X7R parts, and you have consumer electronics companies asking for the standard X5R parts.
And you have to make a choice. If we were to walk onto the factory floors of giants like Murata, Samsung Electro-Mechanics, or Taiyo Yuden right now, we would see a massive shift.
What are they doing?
They're taking their limited production lines and they're basically cannibalizing them. They are dedicating their machines almost entirely to the complex, high-capacity AI components.
Wow.
Which creates a massive vacuum for the everyday consumer-grade parts. If they aren't printing the cheap stuff, the smart fridge manufacturers are suddenly left empty-handed.
Exactly.
But, you know, this leads us to a really bizarre economic contradiction in the sources.
Oh, yeah. The demand mismatch.
Right, because right now, the demand for consumer electronics, things like standard smartphones and budget laptops, is actually quite weak. We have high interest rates, we have stubborn inflation. People just aren't upgrading their phones as often as they used to.
So logically, if demand for consumer devices is down, the parts for those devices should be incredibly cheap and just sitting around in warehouses.
You would definitely think so. But the data paints a very different picture. What you are describing is what economists call a structural mismatch.
Structural mismatch.
Yeah. The top-tier Japanese and Korean suppliers are currently achieving 5-year highs in their shipment volumes.
Wait, really? 5-year highs?
Yes. They are busier right now than they were during the absolute peak of the pandemic electronics boom. However, they are deliberately slashing their production of low-end consumer models.
But why deliberately cut production if there are still billions of consumer devices being manufactured that need them?
It comes down to the brutal reality of profit margins. Those low-end consumer models make up over 40% of their total factory output, but they only bring in about 10 to 15% of their total revenue.
Oh, wow. That is a terrible ratio.
Right. If you own the factory and you have a choice between printing pennies or printing $100 bills on the exact same machine, you are going to print the $100 bills.
Yeah, every single time.
As a result, mainstream MLCC inventory across the entire global supply chain has just plummeted. We are currently sitting at below 30 days of inventory for standard parts.
Below 30 days.
Mm-hmm.
That is terrifying for a manufacturer.
Weird.
Here's where it gets really interesting, though,
Mm.
because it makes total sense when you frame it that way. It's like an airline looking at their profit margins and realizing that their first-class tickets are suddenly so wildly profitable that they decide to just rip out all the economy seats from the plane.
That is a perfect analogy.
Right. Even if there are fewer people overall who want to fly economy right now, those remaining economy seats are suddenly incredibly scarce. And because they are scarce, the price skyrockets.
Exactly. And let's take that airline analogy one step further.
Okay.
Imagine if you absolutely had to fly to keep your business alive, and there were only 3 economy seats left on the entire plane.
Oh, the panic.
The panic that sets in is exactly what is happening in the electronics supply chain right now. This artificial scarcity has completely divorced the price of standard MLCCs from the actual reality of consumer demand.
And the market data in our stack really shows just how deep this panic goes. Let's look at the book-to-bill ratios.
Yeah, those numbers are wild.
For you listening, a book-to-bill ratio over 1.0 means that more orders are coming into the factory than the factory can actually ship out. It is a direct measurement of backlog.
Right. It measures how overwhelmed they are.
Exactly. And right now, Murata is sitting at a 1.30. Samsung Electro-Mechanics is at 1.31. Those are massive post-pandemic highs.
Huge backlogs.
And lead times, which is the time between an engineer ordering a part and actually receiving it, have stretched from an already frustrating 8 weeks to well over 20 weeks.
Over 20 weeks. And that delay is fundamentally altering the cost of building technology.
How so?
Well, historically, if you were a hardware engineer putting together a bill of materials for a new device, the MLCCs were basically a rounding error. They were just pennies, right?
Fractions of a cent, really. You didn't even worry about them. But today, they are rivaling high-end memory chips for their impact on manufacturing inflation.
That's insane.
Companies like Quectel are reporting industry-wide price climbs of 5 to 20% across the board. KMET, another major manufacturer, raised their prices by 20 to 30%.
And the sources highlight one extreme case that is just staggering to me.
Oh, the LTE modules?
Yes. For LTE modules, which are those little cellular radios that go into things like budget smartphones, smart utility meters, fleet tracking devices, the cost of a single MLCC jumped 229% quarter over quarter.
That is a massive spike.
229%. I mean, if you were building a low-margin device like a smart utility meter, a 229% price spike on a mandatory component doesn't just hurt. It instantly wipes out your entire profit margin.
It absolutely does. It can make a perfectly good product entirely unviable to manufacture.
But this brings up a fundamental question about how capitalism operates. If the demand is this clear, and prices are sky high, and factory managers are literally printing $100 bills, why don't they just take all this massive new revenue, buy more factory equipment, and build more production lines? Usually, capitalism solves a supply shortage pretty efficiently when there's this much money on the table.
It usually does. Capitalism is incredibly efficient, but it is still bound by the laws of physics and material science.
Physics always wins.
Always. You have to look at the physical limitations of how these things are made. You can't just, rent a warehouse, buy some ovens, and start raking capacitors.
Right.
An MLCC is constructed by taking hundreds of alternating layers of microscopic ceramic powder, which acts as an insulator, and metallic electrodes, which conduct the electricity.
And these layers are tiny, right?
They are thinner than a human hair.
Wow.
And they have to stack hundreds of these layers into something the size of a grain of sand.
It's just mind-boggling precision.
Exactly. And once they are stacked, they have to be fired in highly specialized kilns at over 1,000 degrees Celsius.
That is hot.
Very hot. And here is the engineering nightmare. The ceramic and the metal expand and contract at completely different rates when exposed to that kind of heat.
Oh, I see. So if the temperature is off?
If the kiln's temperature fluctuates by even a fraction of a degree, or if the pressure is slightly off, the microscopic layers delaminate.
Meaning they peel apart?
Yeah, the entire batch simply splits apart and is entirely ruined.
So the machines required to build these things must be unbelievable pieces of engineering.
They are some of the most precise machines on the planet, and they are only built by a handful of highly specialized equipment makers in Japan and Taiwan.
So you can't just order them on Amazon?
No, you cannot mass-produce the machines that mass-produce the parts. Right now, if a company like Murata wants to expand, they can't just flip a switch. The Japanese equipment makers are quoting 6 to 12 months just for the delivery of a new machine.
Wow. Up to a year? just to get the equipment.
Yeah. The Taiwanese suppliers are a little faster, sitting at 3 to 6 months.
So even if a company has unlimited cash today, they are not producing a single new high-capacity capacitor for at least a year.
Right. And that physical speed limit is what is driving the absolute chaos in the markets.
Everyone knows no new supply is coming.
Exactly. Because hardware buyers know that no new capacity is coming online anytime soon, they are terrified. Distributors have started hoarding whatever inventory they can get their hands on.
Just stockpiling it?
Yes. We are seeing massive players like Apple and entire automotive supply chains preemptively double ordering out of pure fear. They are buying parts they don't even need yet, just to make sure they have them.
Which brings us full circle to that scene we described at the beginning. Those traders in Shenzhen sweating through their shirts, shouting over changing prices.
Right.
That isn't normal factory pricing. That is the spot market.
Yeah, the spot market is wild.
It's that chaotic free-for-all where companies are forced to buy components today at any price because their factory lines are about to halt. The spot market price is entirely decoupled from reality right now.
It is pure panic buying. And because building new factories takes too long and relying on the spot market is essentially financial suicide, the biggest players in the global tech industry are realizing they have to fundamentally change how they do business.
They can't keep operating the same way.
No, they are rewriting the entire sourcing playbook just to survive this bottleneck.
And the sources point to a massive recent development that illustrates this perfectly.
The Samsung deal.
Yes, Samsung Electro-Mechanics just signed a 300 billion won supply deal. That's roughly 216 million US dollars.
Massive.
And it covers the year 2027 with a global AI client. Samsung now holds over 40% of the AI server MLCC market alongside Murata.
Incredible market share.
And they're openly boasting about having cumulative long-term agreements that total 2.3 trillion won. I mean, they aren't just selling parts anymore. They are locking in the entire future of the supply chain.
If we connect this to the bigger picture, this represents a tectonic shift in global manufacturing philosophy.
How so?
For the last 30 years, the entire technology industry ran on a concept called just-in-time manufacturing.
Right, keep the inventory low.
Exactly. The idea was to keep warehouse costs near zero. You only ordered the exact parts you needed, exactly when you needed them, and they arrived at the factory door the morning they were supposed to be soldered onto the board.
It was wildly efficient. Right up until it wasn't.
Exactly. This MLCC crisis is officially killing just-in-time manufacturing.
Wow.
The industry is rapidly abandoning it for just-in-case hoarding.
Just-in-case hoarding?
Yeah. Tech giants and automakers are looking at these microscopic ceramic layers and realizing they are no longer cheap commodities, they are strategic assets.
Like oil or lithium.
Exactly. They are locking down multi-year contracts years in advance because if you do not secure your MLCCs, your billion-dollar server farm or your new line of electric vehicles is nothing more than a pile of useless metal.
It really is.
Yeah.
So what does this all mean? Let's translate all of this for the person listening right now. If you are a hardware buyer, an electrical engineer designing a new circuit board, or even just an investor trying to read the tea leaves of the tech market, how do you navigate this? How do you survive in a market where all the economy seats have been ripped out of the airplane?
Well, the industry insights we reviewed lay out a very clear, actionable survival strategy.
Break it down for us.
First, if you are a buyer, you absolutely must separate the noise of the spot market from confirmed factory pricing.
Okay, ignore the Shenzhen chaos.
Right. You cannot let the frantic 30-minute price changes in Shenzhen dictate your long-term purchasing strategy. You have to secure direct factory allocations.
Makes sense.
Second, you need to implement a risk-based inventory strategy immediately.
What does that look like in practice?
It means identifying exactly which parts are in the crosshairs of the AI revolution and hoarding them.
The specific values.
Yes. You have to stock up heavily on the high-risk, high-capacitance parts, specifically the 10 microfarad, 22 microfarad, and 47 microfarad values.
Got it. 10, 22, and 47.
Those are the specific electrical dams that the AI servers are cannibalizing. If your product relies on those, you need to buy them right now and just sit on them.
Okay, and what about the engineering teams who actually design the circuit boards? What's their play?
Engineering teams have to evaluate alternative suppliers, and they have to do it today.
Because they can't just rely on the big guys anymore.
Exactly. For decades, the default move was to just buy from the tier 1 Japanese and Korean giants because it was easy and reliable.
Nobody got fired for buying Murata.
Right. But you can't do that anymore because Murata and Samsung are completely busy chasing the AI server money. The sources note that savvy companies are already aggressively evaluating secondary suppliers.
Any specific examples?
Yeah, for instance, UF Capacitor's CT41 series. It is being heavily tested right now to replace Tier 1 brands on consumer boards.
Oh, interesting.
This massive spillover demand is fundamentally shifting power in the global market. It's boosting Taiwanese and mainland Chinese suppliers who are just eagerly stepping up to fill the void left by the giants.
It is an incredible chain reaction to witness. A single technological leap in artificial intelligence is quite literally redrawing the map of global electronics manufacturing.
It really is.
Okay, let's pull all of this together. We started our journey today wondering why a piece of ceramic the size of a grain of sand was causing a literal gold rush on the trading floors of Shenzhen.
Yep.
And what we uncovered is basically a perfect invisible storm.
The massive, violently bursty power requirements of advanced AI servers have essentially monopolized the most difficult-to-manufacture segment of the MLCC market.
And to feed that incredibly profitable AI boom, the top-tier manufacturers are actively starving the standard consumer electronics supply chain.
They are abandoning the everyday parts to print those $100 bills.
Which makes total sense for them. But this starvation has sent lead times stretching past 20 weeks. It's triggered widespread panic hoarding among the biggest tech companies on Earth.
Opposite.
And it has completely transformed a fraction of a cent component into a highly strategic asset that demands multi-billion-dollar, multi-year mega deals.
It is a profound shift. And, looking at all this data, I want to leave you listening with a final thought to mull over long after this deep dive ends.
I love it. Lay it on us.
We spend so much of our collective energy debating the grand societal impacts of artificial intelligence. We argue about job displacement, we obsess over software algorithms, and we marvel at how human-like these neural networks are becoming.
We really do. It's all anyone talks about.
Right. But perhaps the true ultimate speed limit to the AI revolution won't be a software problem at all.
Wrong.
It won't be a lack of high-quality training data or regulatory hurdles or even the shortage of advanced silicon GPUs. It might just be humanity's physical, metallurgical capacity to bake enough microscopic layers of ceramic and metal to keep the voltage steady.
Wow. The entire future of human innovation bottlenecked by a microscopic dam. That is wild. Well, thank you for joining us on this deep dive. The next time you pick up your smartphone or read a breathless headline about the latest AI breakthrough, take a second to question the invisible, incredibly fragile supply chains hidden right beneath the surface. We'll catch you on the next one.